Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading.
All right, well,
Welcome.
thanks, Steve. John Jagerson here. Do you want me to get started, or do you have a little bit more of an intro here, Steve?
I just have one thing, and then we'll get started. John, just want to say welcome, everyone. This is Steve Meisinger, your host of the ISE webinar series. I have John Jagerson with us, and John is our special guest. He's going to be talking about how the dollar rebound, how long will it last. We've seen the dollar really rally pretty far, at least against most of the currencies in the last 3 or 4 months. And John is with us. He's the co-founder of PFX Global, and he's really, really knowledgeable on options. So he knows the foreign currency market, but it's hard to find someone that knows the FX market and also knows the options market. So without further ado, I want to introduce John Jagerson. John, thanks for being with us.
Thanks a lot, Steve. If anyone has, as I'm going through my presentation, if you have a question that you'd like me to follow up on, or if you have any, or if you're having trouble hearing or whatever it is, feel free to pop that into the chat box. And if I am not able to answer your question right away, then hang tight, because I'll probably come back around to it. However, I also have my email address listed here, john@pfxglobal.com. You're welcome to contact me there. You can also go to my website, which is at just www.pfxglobal.com. Everything there is free. So if you are interested in learning a little bit more about the spot Forex market, as you're digging into Forex options, we've got several free courses, and it might give you some useful information that you may not have had if you've been traditionally an equity options trader. So to start, I think actually I just got a very interesting question asked, and I think it's a very nice little start to our session. So the question is: dollars has been on a downtrend for almost 3 to 4 years. If we assume that currency market is trending to the mean, so if it returns to the mean, do you expect the USD to be up for the next 3 to 4 years? Well, I am glad you asked that question, because that's ultimately the subject of my presentation. So since it's the subject of my presentation, it's kind of a long answer. So if you don't mind, I'm going to continue. I'm going to answer that question as thoroughly as possible. Now, let me skip forward here on my presentation just a bit. A couple of disclaimers to go through. By the way, for those of you who are familiar with the spot market, I know I've gotten. The last time I did a event such as this for the ICE, which they were very gracious to allow me to do, I got a lot of questions from spot Forex traders about, in the spot Forex, the dollar will switch sides depending on which pair you're looking at. Sometimes it's the base, like it is here on the Australian dollar currency options contract. Sometimes it's the quote in the spot market. So if you're used to the spot Forex market, but you're trying to get into FX options, which I'm sure there probably are quite a few people there, that's the explanation as to why it's a little bit different. To standardize, which I think is a great idea, they've applied the dollar as the base currency, which means that for spot traders, the dollar yen, the dollar franc look perfectly normal, whereas the dollar euro, the dollar Aussie, the dollar pound are just inverted. But that's the only change. So a little preface there. I got a lot of questions about that the last time I presented. So let me, what I wanted to do was kind of look at this in a couple of parts. To answer this question in a couple of components. The first of which is what's causing the U.S. dollar strength. Now, this is by no means a comprehensive or all-inclusive list. But these are the 3 things that I feel like are probably the dominant factors at driving the value of the dollar. And I've found that as I'm talking to traders right now, I get the feeling that they feel like it's somewhat paradoxical as to why in a market, in an economy as bad as what's happening to the U.S., why is the U.S. dollar strengthening? And the U.S. dollar is a funny little instrument because, so for example, to the point of one of the questions, the dollar's been weakening over the last while. Even though we were expanding economically. the dollar is kind of funky, and one of the things that causes that behavior is, of course, the dollar is, in the U.S. itself, is one of the largest tax havens or tax shelters in the world. It's also, the debt issued by the U.S. is pretty much as risk-free as you get. At least that's the way the traders look at it. I would share that, that opinion, that that's about as good as it gets. And so, therefore, the dollar acts as a bit of a shelter in the storm. So as uncertainty, and I have a good example. I'm going to go through these three little factors, and then what I like to, I much more prefer to be looking at the live chart. So I've got several charts that I want to take a look at here in just a minute. But uncertainty does drive a flight into quality. That's the way you'll hear it described quite a bit. So what's happening is that this uncertainty is leading to a flow of capital, which is number two, where this flow of capital moves from higher risk into quality, which largely is, or is quite often, Treasury debt, so notes and bills from the Treasury. The third thing is economic contraction, and this is the one that I find that people get caught up in this paradox. They feel like, well, if the U.S. is contracting economically, why is the dollar getting stronger? What would cause that? Well, it's one of the things that I find that traders struggle with a little bit is understanding that what is going on in the U.S. For example, yesterday I wrote an article about the fact that a lot of traders were really confused as to why the dollar was not getting pounded following retail sales yesterday. Retail sales numbers came out in the U.S. Big surprise to the downside. This is the third month in a row with negative growth. And but we have to look at it in perspective. So retail sales releases in Australia, Europe, and in the UK haven't necessarily been that much better, particularly in the Eurozone, which is the dollar-euro or the euro-dollar, depending on how you look at it, is kind of a proxy for the dollar index itself. So economic contraction is more or less, the point is it's worldwide. And what happens is if you can't get yields in investment yields or investment profits where you are. So, for example, if you're trying to make money in Australian equities and there's just nothing going on, well, and there's a lot of uncertainty, it kind of creates this triple effect of essentially money flowing into the highest quality asset available, which is the dollar. Let me go on here just a little bit, or rather, dollar-denominated assets, which quite often is Treasury debt. So what could slow its growth? And this is kind of interesting. So right now, we have the Treasury and the Fed have kind of ganged up, and they're trying to manage the credit crisis, this liquidity crunch that we're dealing with, which has led and is I think, the cause of a lot of the volatility that we're seeing. Well, if we see really successful crisis management, then we may shift back to traders being more interested in taking on more risk. Well, what could happen and what is likely could happen is it will revert back to some of the trends we've seen in play over the last 3 to 4 years. So, for example, getting rid of the dollar assets may be something that traders look at as they start to expand into global equities, as a for instance. So shifting that capital back out into the world that now looks a lot safer if we're successful at it. I think that's highly unlikely, actually. Number two is very unsuccessful crisis management. If the crisis in the U.S. becomes much more pronounced and we don't see the rest of the world or the entire world following along, but perhaps some stability elsewhere, I look at it as kind of the inversion of and the inverse of what happened back in the 90s with the Asian financial crisis. Asia just got pounded, but not the whole world. We didn't see the same kinds of effects to the same extremes in Eurozone and in the U.S. So if that were to happen, if we're very unsuccessful, but the rest of the world were able to keep up, then we may see the dollar start to weaken then as well. Number three, finally, global growth. That's on if it goes all the way from just the rest of the world being relatively safer than the dollar to the rest of the world offering higher yields than the dollar, we could see that happening. I think all three of these are actually quite unlikely. There are some other things that I'm looking for that would give me a heads up as to, number one, what can I do if I expect the dollar to continue appreciating in value, at least in the near term? So I'm going to talk about that as we go to the charts. But I'm also going to talk about at what points might we expect a little bit of volatility? what kinds of warning signs could we look for that would give us a heads up that there's a disruption in the trend, specifically in the trend for a stronger dollar?